All right. So let's start the recording. There we go. All right. So first things first. Let's start the replay. And we're going to go to what time? Oh, you know what would be really nice? If I put a date. Today's date. What time? All right. Boom. Let's see what we've got here. All right. I think I said drop and pop. Yeah, originally I said a drop and pop. But then I looked at it some more. And I said, oh, right. I originally said drop and pop when we were here. But then this happened, and I said, oh, man. I want to see if it can even pop. Because this breakaway gap is looking too strong. I'm looking for basically an immediate rejection between this 5-minute order block, this 2-minute order block, superimposed this breakaway gap, which was being treated like support. Last minute looked like it was trying, it printed inside this breakaway gap, wicked through, but couldn't print to the top side. If we're not going north, we're definitely going south. So I said, all right. You know what? Let's take a quick look at that dealing range that we have on the overnight. Let's see what that looks like. Because in theory, that could be interesting, telling even. All right, what do we have here? According to this, we're at the 236, which would put us in... I can't see. I need to make that bigger. This is the 0. That's the 236. Okay. So that will put us in discount already. That's why I don't like using this. Because things could be completely different. Whatever. I also might have to flip it, so I'm not sure. What happens if I flip it? First flip one. Where does that put us? Okay, so that would put us, which is interesting, because then that would put us at the 786. Which, you know what, isn't the end of the world. Alright. Okay, fine. If it works, then it works. Who cares? You reject the 786 and you kind of basically just fall, which is interesting. Because, as a matter of fact, now I'm curious. I'm not going to do that now. Actually, you know what? Let's just do it now. Where's my sessions indicator? Favorites, sessions. All right, so we are. Oh, excuse me. Okay. Spasibo. So let's see. We are. Fib is up. We are at the bottom. No, we're in the middle. How does this work again? No, so technically we wouldn't have flipped it anyway. But in this case, flipping it actually makes it in our favor. So maybe it's, I don't know, whatever. I'm not using that because I think there are better things to use. So what is a better thing to use? Let's turn this off. Unflip. Turn it off. Okay. So what is a better thing to use? A better thing to use would be, we have that. Okay. Also would have this here. And where does that put us? That puts us at a 0.75 rejection, which is pretty sweet. 0.75 rejection. I would honestly like to see it come up to the 786, but if you can't do that, here we are. So 786 rejection. If you can get in off the rejection of that breakaway gap, it falls for about 60 points. Yeah, where is this? This is candle low, 466. Did we create a devil's mark? No, we didn't. There's a wick. It's just not visible very well. Okay. So wick down. It wicked into, let's say, midnight. And then what happened? So this is telling us we're probably going to try to fill the gap, but we have two prior first presented fair value gaps inside of the 50% of our ladder. So it's going to be difficult to descend the ladder. Plus, we have a decently rated order block. 1 minute, but 70. Troublesome. Next thing we do, continuation. So, if I didn't have so many PD arrays here in this area, I, like I said, would like to have been in this earlier, especially considering the amount we moved and printed in. I wanted to see this go down. But like I said, start getting squirrely around this area. We do have some PD arrays to the bottom. Some first presented fair value gaps at the bottom that I would like to see addressed. But in order to get there, we've got to get through some stuff. Also have a London low. So maybe we want to see that get swept. Let's see, what do we have? I remember thinking this is easy to chop someone up. So let's see. Okay. And we exactly start to turn around at the NYPM, which has a superimposed bullish order block. Let's see, what did that do to the score of our order block? Did this change the score? Order block was scored at 70, and then a print inside turned it to 64. Okay. And then we continue to the downside, which is lovely. Actually, if we look at that again, we'd say that this is a decent entry considering the rejection. If we look at our fib, we have a 0.5 on this fib rejection. Honestly, even this 0.5 would have been nice too. Okay, I see that now. Based on that long term, I have to fix that fib indicator because this would have been very useful. Boom, 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 rejection, boom, another great entry. This, again, concerning, but great entry. Couldn't make it up there. All right, next one. Boom, exactly what you want to see. So if you can get in here off the first candle, 518, you get yourself about 90 points. Honestly, where would I like to take this to? Oh, my apologies. This wasn't London low. Oh, London low is here. I want to see that go to London low, which is at the 62.5%. Let's see. Can it make it? I say no. It starts to turn around, which is concerning, especially because it printed past your recently created NYAM, which is superimposed on your NYPM first presented fair value gaps. Actually, yeah, I would not like that at all. And why is there an NYAM here? Why, pray tell, is there an NYAM first presented fair value gap? There's no next candle. Whatever, it's still drawing, so it doesn't matter. No, it's solidified. What would cause that? This candle. There's a wick. Oh, is this wick override? It doesn't look like it is. Very well. We'll leave it alone for now. Okay, yes, that's exactly what you want to see. Alright, so, shoot. Okay, so let's see. What is our fib? Oh, because it's frozen. I think. I don't have a short-term fib, which means this might be frozen. Let's try that again. Okay, no, it's not frozen. It was just, it's thinking, because that means it's in the middle of somewhere. Very well. Okay, so we've got ourselves print past, boom, boom, there we go. And because it's in the middle, I don't get a short-term fib. Fine, be that way. Come back to the midnight, next candle. Okay. It's not doing, oh, because of the, yeah, fine. Anyway, we get a 0.5, again, rejection. Couldn't make a higher high like it. Couldn't get up to the mid, so, okay. Yep. Also because of the amount of progression. I see. All right. That is what it is. So this is, according to this is kind of useless because now these are counter. It's saying the midterm is the counter fib to the long term, which is annoying. I need a bigger time frame for this. Anyway, we've got a 382 rejection on your longer term, so your extra long term, which, okay, I see that's going to be more useful if I do that. Okay, and then you fall some more. So that, okay. And the long term still hasn't changed, which is fine. Okay. So yeah, that's rounding. This is a very cell-like candle, but the wick with the wick rejection and then the wick continuation shows us that you have to get out of this trade for sure if you're not already. 441. You could definitely have squeezed. No, you definitely, yeah. 517. If you got it at 517, you could have made 100 points out of this down move. That's exactly what we're looking for. All right. So this today wasn't as hard as I thought it was. Okay. That's really interesting. I thought that today was harder than I see because I wasn't able to look at my phone properly. So I was looking to get in here, and by the time you get in here, you get chopped up. I see. The move started here. If you were able to get in here, you were swimming. Because, like I said, that was a heavy rejection block. First thing it did was reject. Second thing it did was reject. The third thing it did was melt. So, okay. Now, I know from experience, or when I say experience, I just remember. Okay, I see why this is the first presented now. No, this is a wick. So why is this a first presented? I'm so confused. Where's the top of this candle? High 443. 443. Oh, that's down here. Okay. So if that's down here, then where's your candle here? The low is 429. So 443 and 429. This should not be a first presented. What the hell happened? There's no fair value gap here. I'm so disappointed in this indicator. Oh no, it looks like it is actually. Was this? No, but there's no wick here. 443 429. This came all the way down here. First of all, it doesn't even continue. It just stops. What the madness is this? It's supposed to continue all the way across the screen, which means that that's not the first presented fair value gap for the AM session. If anything, actually, maybe it hasn't yet been created. No, because this is a fair value gap here, I think. Whatever. I'll look at this another time because priorities. So anyway, this comes back up. I forgot why this rejected. Was there a reason why? I think I said there was a London low that it missed. But what was the drawn liquidity? Okay, so we have a fair value gap here from 759 that it wicked into and rejected pretty mightily. Okay, so that's your answer here. Rejection, bodies higher. That it came back down is very interesting. It rejected 25%, but then it couldn't make a lower low. Plus it opened higher. Okay, it kept opening higher. So close higher, open higher, open higher. Ooh, that's dangerous. Okay, I see that. It's hard to see that live, but training my eyes to see it is useful. Okay. I guess considering the wick rejection and like I said, the wick fill. All right, so you can definitely get enough points out of this. But anyway, that I wish there were a better way to see this fair value gap because there's no way I could have seen that. All right, fine, whatever. Also, this is a rejection. I mean, the print past 50%, the job was done for the day. 70% sure, but what I missed was I would have thought that print past 50% indicated to me that there was a good chance you were going to continue to the downside because you were bearish. Having said that, I also respect the fact that we are dealing with FOMC today, and that was late in the day. Late in the day meant that morning was likely going to chop, didn't get a full move or pick a proper direction. Furthermore, you got a strong bullish order block down here. And 2 more first presented fair value gaps inside of your ladder. So there's reasons to turn around. Having said that, if we continue, what we'll see is the rejection of that fair value gap resulted in a already 100-point move right back up, right to that strong bearish breakaway gap that we called out earlier that started this move. Wick through, slight rejection into what looks like a bearish OTE, but no confluence there for the short. Actually, yes, there is. That goes enough. But the reality is, oh, well, you're still at the 618 on that area. Having said that, I would have changed that dealing range around, considering the fact that, that no longer applies. It's 930. We have a brand new dealing range. And if we look at this properly, what we'll say is we just tapped the 786 on our intermediate, as well as the 786 on our current long term. So we only need one of those. Which means we're probably going back up. And we don't. We continue to go down. Gosh, we go down further. My goodness, I read that wrong. So the original OTE would have been much better. So that 618 holds true. Not only that, I guess actually we wicked through it. We wicked through it and wicked right to the 786 that we had missed before. That's good to know. Okay, I missed that. Wicked to the 786 from before. It's extreme and no interest in even coming back up there. Alright, I see. That is a very bearish signature. Fine. To the T, isn't it? 543.5, 542.25. All right, so you're off by a little bit, but still, that's a beautiful wick. 786 rejection. And that's your real move. Oh, I remember now. This was also a sweep of... Gosh, what was this a sweep of? This was a sweep of something. It was not just a sweep of the 929 high, which created, I guess, relative equal highs. But this, okay, opening range high sweep. What else did it miss? It was like previous week's high. This is 945. Ah, right here. Previous week's high. We said this was a strong area. Boom. Because it's a high. So obviously, boom. Boom. Okay. So we have enough confluence to get in that trade. Sweep of previous week's high. OTE. 786 sweep. And then, what's this? Come back. Reject the 382 several times. And then you fall. And then you can get another 100 points, 100 plus points actually out of this. Because if you got this from here off of that, I called it, gosh, that's 150 points already. Take that to Tokyo. Oh, that's why I don't like using fibs there. Reject Sydney. Wick past to the 37.5. Do you fill the gap today? Because that is a mighty order block. Yes, you do. You touched the order block. You didn't do anything to it, actually. Okay, you have to come back up. You touch that. Oh, okay. Where does this candle end? Okay, so that has a strength. That order block was enough. I suppose. Oh, 2 minute 82. Oh my word. Okay, 10:10. Where does this candle end? We can't read that. Let's try that. Oh, 57. So here. Okay, so that was a CE of the Tokyo first presented rejection. Alright. That didn't come back down to retouch. I say, oh, here we go. No, that's still not it. I don't understand why that happened. It can't be wrong, so why? Is it because of the volume imbalance? I'll have to look at it later. Because that's bothering me. NYPM, I say you reject that. You don't. You print through it. Keep going. Midnight. You struggle. You continue. And maybe you reject the top. At this point, you should have been done trading anyway. Because this is madness. This is just big chop. Which isn't bad. If you know it's big chop, you can ride it from the top to the bottom. Let's see. Do you resweep previous week's high? Yes, you do. You invalidate that breakaway gap. Yeah, it's a decent entry. Question is, do you stay there or do you try to come back up? Again, 1045. Get you. Oh my word! You reject that area pretty mightily. Come right back down, create an even lower low. Oh, and you deflower that order block. My word, with that long wick. That's a long wick. Okay. Oh yeah. Okay. And then the macro. Take that. I say you melty again. 11. Struggling. But should still be in it. And the macro is done. 11:10. You're just not really doing much at this point. Looking for lunch. Looking for lunch. Lunch is here. I took that. So basically, the vacuum is sucking. And that is your 11:30, and you're done for the day. Go to lunch.